Welcome to America's Commercial Real Estate Show. I'm Michael Bull. We are your source for market intelligence, forecasts, and success strategies. Thanks for being with us. We appreciate you being here as I watching the show or listening around the country. Maybe you're on YouTube, iTunes, the show website, or one of the radio stations. Well, today we have a great show for you. We're going to talk about the EB-5 program. And if you're not familiar with that, we'll cover some of the basics, why there's some advantages there if you're in the commercial real estate industries, and also some changes going on that may happen with EB-5. Please welcome my first guest. It's Ronnie Fieldstone. He's a partner with Arnstein Lehr. They are a law firm based in Miami. And Ronnie, you've got a lot of experience working with the EB-5 program, right?
Yes, I have. I've been very active in the program for about 8 years. I started in 2009 during the recession, and I say that with emphasis added, because EB-5 was really an unknown program and underutilized since its inception, the Regional Center program, since 1992. So it's been around a long time, was totally ignored and very inactive. So what happened? In the recession, starting in 08 and 09, money dried up. Developers couldn't get financing. And EB-5 started becoming popular because it was a method for investors, primarily from China, to invest $500,000, create 10 jobs, and gain citizenship to the United States. So if you look at the statistics, from 09 to 10 to 11, 12, 13, EB-5 started to become geometrically popular as a source of financing for developers, primarily second mortgages and mezzanine financing, which was otherwise unavailable in the marketplace during those years, even first mortgages. And as a result, EB-5's accounted for billions of dollars of capital being invested in the United States, involving multiple times of the project size itself. And today, the program has become completely mainstream, meaning that major developers in the country are utilizing EB-5 because of the financial benefits it entails. Basically, EB-5 traditionally has been a capital source that is subordinate to senior financing. And traditionally, developers that are seeking mezzanine financing or second mortgage financing go to Wall Street or other similar markets and are paying a interest rate or a cost factor in the double-digit range. EB-5 financing has traditionally been in the range of 4 to 6% plus minus, so it has been very affordable in cost savings for developers. EB-5 financing is traditionally non-recourse and is subordinate to the senior financing. So what's happened is the program, again, was kind of in its infancy, not too popular in 09, and then again, as more and more developers started to become active in EB-5, it became mainstream to the point, of course, we all saw the recent CNN reports, etc., on the Kushner project in New Jersey, which gained national attention. That was a typical EB-5 project. There was nothing unique about the project, except it was a very large one. What was unique was the political implications of that project. But basically, in the last several years, New York City metropolitan area, which includes New Jersey, parts of New Jersey, and surrounding areas, has been by far the #1 market for EB-5 capital in the commercial industry. And I understand that possibly up to 50% or more of the projects in the greater New York area are utilizing EB-5 capital for the reasons I just mentioned.
Well, let me ask you this, Ronnie. The actual funding from EB-5, so if a developer is using it for their mezzanine financing, does the actual funds, do they actually come from the immigrants who are using it to gain visas into the U.S.?
Yeah, good question. Technically, the way it works is this. The Regional Center, which is a licensed organization, licensed by the Immigration Service, USCIS, licenses regional centers. Right now we have probably around 900 regional centers in the United States, which means the entire country is stock with regional centers that sponsor programs. Each regional center has a territorial area that it can do business in. So usually regional centers have an SMA area, like a New York City area. Some regional centers have entire states which they can promote development. And then what happens is the regional center sponsors a program. The program then forms a company. It's either a partnership or a limited liability company. That entity becomes the depository for EB-5 capital. So EB-5 investors invest their money as a capital contribution into what we call the NCE, New Commercial Enterprise. The New Commercial Enterprise traditionally takes that money and makes a loan to the developer. We call the developer the JCE, which is the job creating entity. The job creating entity then generates jobs that qualify the EB-5 investors for immigration status. The number one generator of jobs is construction jobs. Construction jobs includes both direct and indirect jobs. And many programs are really geared towards strictly construction jobs and not operational jobs, because if you're building a high-rise apartment project, you don't have many operational jobs. However, if you're building a hotel, then your jobs would come from both construction and the operations of the hotel.
Now, don't the 10 jobs have to be permanent jobs? So would construction
That's
be?
a very good question. This is the way the economic model works. If your construction time period goes for 24 months or more, which is pretty typical in a large project, especially when you're dealing with major metropolitan areas where it's, let's say, more cumbersome to build a large building, with all the permits and approvals and time schedules, that if you have direct and indirect, then you count both direct and indirect jobs. So let's say in many models, every $1 million of hard cost expenditure may create anywhere from 15 to 18 jobs. And they're deemed permanent jobs because as long as the construction goes 24 months or more, you count both the direct and the indirect jobs. So
I see. So let me ask you, Ronnie, so how long does it take? The mezz financing in single digit does seem attractive. How long does it take to set up this type of EB-5 financing?
Well, if you're new to the industry, if you're a developer that hasn't done a transaction before, it takes a longer time because first you have to get familiar with what you're doing. You got to get known in the industry. You got to get your marketing together. But if you're an experienced developer that's doing multiple transactions, and many of the developers, a good example is Lehr Homes. Lehr Homes, of course, is a large public company, very successful, and they have been actively pursuing EB-5 capital raise for years for their projects in California. And so when they go to market, they're able to generate EB-5 capital much faster than other programs that don't have the same familiarity with the marketplace. So traditionally, we tell clients that the process before funding could easily take a year. By the time you do your documents, get them done, go to market, educate the market, get to the agents raise the capital, you have to get the money back into the United States into an escrow account. 80 to 85% of EB-5 capital traditionally in the last several years has come from China. China has imposed certain currency restrictions that slows down money coming out of the country into the United States. So it's a time-consuming process.
Right.
If you're an experienced developer that's done this before and you have a roll-on project where the agents are ready to do the next project, then it's a little faster and the money comes in over time. So it's not like you get one check for all your money. The money is funded over an extended period of time, and the money is then lent out.
I'm with you. And before you have to go, I want to ask you a quick question. What kind of leverage have you seen being able to be utilized with an EB-5 mezz financing?
Yeah, very good question. People in the olden days, people thought, I don't need any developer equity. I can just finance. I get my senior, I get my EB-5, I'm done. I don't have to put any equity in. Those days are gone. EB-5 investors and their marketing agents have become very sophisticated. So we generally tell clients to budget plus minus 20% equity in the project. So I'll give you an example. You build a Marriott hotel in downtown Manhattan. It's a $100 million project. Typical model is $20 million EB-5 capital, $20 million, developer equity, $30 million EB-5 capital, $50 million senior financing. The benefit of that model is it's very easy, or much easier to get a 50% loan from a senior lender than to get a 65, 70% loan from a senior lender.
Absolutely. Well, Ronnie, Ronnie, thank you so much for joining us. We appreciate you being on the show. Great information. If you'd like more information, we'll put Ronnie's website on our show website, creshow.com, and stay with us. We'll have more in the future of EB-5 and maybe some potential changes. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.